Hi, folks. Nick Shaheen here, recapping the day and the week ending January 16th. And let's start with today's scoreboard. Happier than yesterday for sure. Green across the board. Started a little iffy, but then we recovered and had a fantastic day. Over 1% on everything. The standout is the RD small caps. RUT is up almost 2%. However, so this is today's action. You can see the S&P up and away, trading an up channel after an iffy start, like I just said. Apple was down 0.78. The open interest data that we had covered in our service foresaw this coming. This 105, we saw it earlier in the week as a possibility. All right, so why do I say don't rush into just tooting all the good horns? Is because let me zoom out to just 2 days before I zoom out to further than that and review the price action over 2 days. We have epic days. We have insane moves in the currency markets with global repercussions to which we are not aware yet of all the repercussions. Now you're starting to hear of some houses blowing up and needing loans, hundreds of millions because of leverage, because usually the currency moves are so small, they allow for bigger leverage, but the moves were like 11% yesterday, 15% today. It's just insane in the Swiss franc. So we don't really yet know all the damage. So what happened in the Nasdaq? That's the Nasdaq over 2 days. Yesterday we had a hideous day. Overnight was even more hideous. Nobody's talking about the fact that we were down almost to 4,000 on the NQ, and we recovered before the open. And I expected to see minus 20 points today at the open, but we didn't. And then we kind of like as if nothing happened. What a difference a day makes? Nothing. No difference a day makes. Look at that. We're stagnant. Same with the S&P. The ES, the E-minis, were down to the 70. Look at that, the low. That was some scary stuff right there. But then, as if nothing happened almost. This is where Christine Lagarde started talking yesterday from the IMF. So anyway, this is the recap of just a couple of days. And Apple, if you wanted to see Apple, the lid was at 110, and it was a lid indeed right here. If I expand it to 3 or 4 more days, let's go 10 days, you can see it was definitely a lid. They tried to poke out of it, but they didn't, and it failed right here, and here we are. As a company, it's still a good company, just sentiment swayed. Oil is the talk of the town, so we have one level here and we have one level there. Yesterday, we faked us out. Over 51, 51.7 I think was the high. So it ran up 5% yesterday, down 5% or so, closed. And today I actually heard coverage saying, oh, it was good to see things stabilizing in oil. Stabilizing? Up over 4%. They call that stabilization. I call that, price action, my friend. Anyway, so oil was crazy up today. Bonds were down, and 10-year rates finally recovered the lows that we had. We had a scare in the 10-year rates, indeed. So let me see here if we can pull them up real quick. Look at that. 1.7 yesterday after the market closed. I mean, I remember a time where we used to say, oh my gosh, under 2, it's crazy. So let's look at the 10-year rates, and I'll show you in pictures. We used to say, the crash that brought us in October, down 10% correction, that one-day crash in the 10-year, barely touched 1.85, whatever that day's low was, 1.868. And we thought that was the end of the world. Now we're happy that it's coming back to it, and it's still not there. So if I zoom out, it can tell a story, but we won't talk about it today. I'll just show you a picture. Take your own conclusion. All right, so let's see if we're going to toot the day, the week. All right, here is, what is this? We have the triple Qs, so that's the NASDAQ. Not too happy of a story on the overall week. This is weekly candle 1 year. Why don't I like it? Because of this. All right. And lower highs, and I don't like it. It's extended. SPY. It's probably the same story. Those are the S&Ps. This is still no one explains that to me, but let's ignore it for now, like everybody else in the world. I don't like that. Red candle as well on the week. On heavy volume, notice the volume better than almost double 2 weeks ago, better than last week. So what's left? Small caps. Oh, small caps, 3 weeks of red candles with lower closes as far as not lower highs because this high is lower than this one, but this is a big candle spanning the whole area, so I don't like these. Still, what about that's the score for the day, for the week. What about next week? Let's speak into next week. Well, we have one event that we need to mention and not to mention anything else really. ECB. What would Draghi do on 122? I think all eyes are focused. Short week in the U.S. All eyes are focused will be on that day. It's a binary event on off. Everybody expects him to do something, and after the the franc move, the Swiss move on the franc, taking the cap off of it and allowing its currency to run, in anticipation of Draghi doing something next week, kind of told Eurozone that, hey, buy the stock market because Draghi is coming out with something. Why else would the Swiss do that? So the ECB must have talked to the Swiss. That's the assumption. I buy that logic. I buy it. However, I think they have so many hampering issues in order to deliver a huge QE. So I have a feeling, and this is just a feeling and just a guess, that they're going to deliver something that's going to just whet the appetite, and they're still going to continue with the yak of better things down the road. That's what Draghi has been doing for 2 years, and it's been working just great. So we may have a pop in the market if they do that, and then maybe a little sell-off because say, wait a minute, where's the half a billion or 500 billion or a trillion, whatever they're expecting? I don't know if they can deliver such a big program with all kinds of iffy issues with Greece and company. So, but they might. So, what to do? You stay limber, you stay small. I'm not doing anything big. I'm trying to do iron condors that are likely to survive. And how do I do that? I just have to pick, sell spreads way out and be, ready to close it for a loss a little bit. Don't let anything run against me. The peak into next week tells me that the S&P is not going to want to run too far. Neither is the SPX. And it tells me that the Nasdaq is kind of pinned to a tight area, right about where it's at. Same with the small caps, right about where it's at. Small caps have the best look as far as peeking into the open interest into next week. All this can change. I will have more at the pre-open on Tuesday. So trade light. Don't take too big a stance because it's a binary event. It levels the playing field. The people who trade willy-nilly and the people who do a lot of homework are at equal likelihood of success because it's a coin flip. We don't know what they're going to deliver and how big it's going to be. Even if we did, B, we don't know how the market's going to react to it. That's the exact definition of a double coin flip, really. It's kind of like playing the earnings. You could know the P&L exactly before they deliver the earnings, and you can still get it wrong with regards to how the markets are going to react to those earnings. So don't take big risks. Staying out for 1 week is totally okay. Nick Shaheen signing out.